Good evening, friends. I am CMA Rathna here. As you know, this is the fifth day of our live streaming for the CMA Inter Group 1 casting. Super quick revision for the examination, that is upcoming examination oriented one. Right? So the today's topic is, the topic for the day is reconciliation. I can tell you this is very much important topic, and in not only in the intermediate, in the final level also, in the group 4, that is in the cost and management audit, you have this reconciliation of financial accounts and cost accounts. So there also you will get 8 marks. In the intermediate level also you will get 8 marks. The page number this is a reconciliation of financial accounts and cost accounts. See guys, is my voice audible? Is anyone is ready? Can you please tell me, or else I'll move further. Okay, the first question, right, the first question here is, the net profit of a manufacturing company appeared at 64,500 as per the financial records for the year ended 31st December 2016. The cost books, however, showed a net profit of 86,460 for the same period. Okay, a careful scrutiny of the figures from both the sets of accounts revealed the following facts. What are the facts revealed? Income tax provided in financial books, this is the amount. Bank interest credit this much. Works overhead under recovered this much. Depreciation charged in the financial accounts this much. Depreciation as per the cost is this much. Administrative overheads over recovered this much. Loss due to obsolescence charged in the financial accounts this much. Interest on investment not included in the cost accounts this much. Stores adjustments credit in the financial books this much. Loss due to depreciation in stock value is this much. Prepare reconciliation statement. See guys, one problem I'll explain you with conceptually. From next problem onwards we will go directly. See one by one I'll explain you. Income tax provided in the financial statement, financial accounts. See, look at me. See, this is a financial profit. This is a cost profit. Income tax is only shown in the financial, in the sense income tax profit is financial profit is getting decreased. See, we are in the same place, financial profit and cost profit. When the income tax is deducted from the financial accounts, it is not deducted in the cost accounts. So when it is deducted from the financial accounts, income in the financial accounts is getting decreased. So you are starting with the, see, my suggestion, always start with only one accounts. Either you have option to start with the financial accounts, or you have option to start with the cost accounts. But my suggestion, you start with the financial accounts. See, in the intermediate first group, okay, you are in the intermediate first group only, right? So in the foundation also you have studied BRS. Did you remember bank reconciliation statement, like bank balance, cash balance, something you did, right? In the same manner, here also we will be doing the financial accounts and the cost accounts reconciliation. See, this is a gross profit. Take the example. This is a gross profit. From the gross profit, financial profit and cost profit. Income tax is deducted only in the financial profit. So, the profit in the financial accounts getting decreased. When it is decreased, what you need to do? You are starting with the financial. So, you cannot touch this one. You cannot do any adjustments to the one you are not touching. So, you need to add back. You need to add back the amount which is only decreased, only deducted in the financial accounts. So, when it is deducted in the financial accounts, you add back it so that you will come at both at the same place. Both at same place. So, here income tax is deducted in the financial statements. So, in financial profit gone down, you are starting with the financial profit. So, income tax is deducted, right? You add back it. What is the amount? 20,000. So, you add 20,000 income tax, right? Next one, bank interest is credited. Again, this one, bank interest is credited, financial and cost. Bank interest is credited in the financial accounts, not in the cost. So, when it is credited in the financial accounts, financial profit gone up. When it is gone up, you cannot touch this one because you are starting from this one, financial. So, you cannot touch the cost one. So, you come back here. So, you reduce in the financial profit. How much? 250. You reduce 250 bank interest credited in the financial accounts. Next one, overheads under recovered. Overheads under recovered, I'll explain you with the example. Take the example, there is a gross profit. You can say me, madam, why we can directly remember why you are saying in this way. But my suggestion, if you remember here, you will remember. But in the examination, if something goes wrong, you will remember in the other way. So that is the reason I'll try to give one example so that this example can be worked in the examination also. Take the example, this is the financial profit. Financial accounts, this is the cost accounts. In the financial accounts, take the example, you have 10,000 rupees gross profit. Here also you have 10,000 rupees gross profit. See, here is said overheads under recovered. Under recovered in the sense, whatever is there, from that you recovered this much is the less one. I'll show you with the example. Actual overheads, example, actual overheads 3,000, but you recovered 2,000. Example, this is an example one to make you understand conceptually. So, 2,000 rupees. See, in the financial you deducted only exact one, but in the cost you have under recovered. Under recover, works overhead under recovered 1,500, but in our example 2,000 rupees. So, 2,000 rupees. So, here as per the financial cost profit, it is 8,000. But as for the financial profit, it is a 7,000. You are starting with the financial, you cannot go to the cost. So, when financial profit is here, cost profit is here. So, what you need to do? You need to add back the under recovered portion to the financial statements. That is the financial accounts. See, you need to add back. What is the under recovered amount? The under recovered amount is 1,550. You need to add back this one. 1,550. I hope you are understanding. Right. Next thing. See, in the examination also, if you want, you can write in this way in the examination also. Next thing. Depreciation charged in the financial is 5,600 and depreciation charged in the cost is 6,000. See, depreciation is charged, depreciation is an expenditure. Expenditure, when it is charged less, the profit will go up. So, depreciation charged in the financial is 5,600 and depreciation charged in the cost is the 6,000 rupees. In the sense, 5,600 rupees you deducted from the financial instead of 6,000. So, your profit has gone up. Right, when the expenses are less deducted, profit will go up. When the profit is going up, financial one, you cannot touch the cost one. So, what you need to do? You need to reduce it. You need to reduce it. The amount, what is the less amount? What is the less amount? 400 rupees. Yes, over recovery of depreciation is 400 rupees. Are you understanding? Next, administration overheads over recovered. Actually, example, actually you are supposed to deduct 1000 rupees, but you have deducted 1500 rupees. What has happened? When you have deducted extra expenditure, the profit goes down. When the profit is going down, see, one more thing, you remember one thing. See, in the financial accounts, overheads are charged on the actual basis. Whenever in the question you see over recovered and under recovered, that is always in the cost accounts. Right? That is always in the cost accounts. So in the cost accounts, overheads, administration overheads over recovered. See, your example I am saying, you are supposed to recover 1000 rupees, but you have recovered 1500 rupees. Expenditure, you have shown higher amount. When you are showing higher expenditure, the profit will go down. When the profit is going down in the cost accounts, the profit as per the cost, as you have over recovered administration overheads, so cost profit gone down. You cannot touch this one because you have started with the financial, so you also reduce in the financial one. How much amount? 850. Reduce it. Getting the point? Next one, loss due to obsolescence charged in the financial one. Loss is charged in the financial one in the sense the financial profit gone down, so you cannot touch this cost one, so you add back this in the financial one. 2800. Add back 2800, loss due to the obsolescence. Getting the point? Next one, interest on investment not included in the cost. Interest on investment included in the financial only, so financial profit gone up, so you cannot touch the cost one, so deduct it from the financial. How much? 4000 rupees. Deduct 4000 rupees. Next one, stock adjustments credit in the financial accounts. In the financial P&L, the stock adjustment amount is credited. When it is credited, financial profit has gone up. When the financial profit has gone up, your year in the cost, financial profit is here. So you come back here, down. So reduce it. How much? 240 rupees. You reduce it. Next one, loss due to depreciation in the stock. Loss due to depreciation in the stock only in the financial. So when financial cost, loss due to depreciation in the stock reduced, financial profit is reduced. So you add back the amount which you have reduced in the financial one. So 3350 you add back it. Yes, now this is a profit as per the financial one. Then you add all these. $20,000 plus 1,550 plus 2,800 plus 3,350 plus 64,500. That is nothing but 92,200 minus bank interest credited in the financial one. This one 250 plus 400 plus 850 plus 4,000 plus 240, that is 570. 92,200 minus 5740, that is nothing but 86,460 rupees is the profit as per the cost accounts. Right. Next problem. The net profits shown by financial accounts of a company amounted to 18,550, while the profits disclosed by the company's cost accounts for the period were 28,660 rupees. On reconciling the figures, the following differences were noted. What are the differences? Directors' fees not charged in the cost accounts. A provision for bad debts and doubtful debts is this much. Bank interest credit is this much. Income tax this much. Overheads in the cost accounts were estimated 8,500, and the charges shown in the financial books of accounts is this much. Work was started during the Work was started during the year on a new factory and expenditure 16,000 was incurred. Depreciation of 5% was provided in the financial accounts. Prepare a statement reconciling the figures shown by the cost and financial accounts. So, here, one by one we will see. I told you always, my suggestion, it's up to you, but my suggestion, you always start with the financial profit. The profit is 18,850. This is the financial profit 18,850. To this, do the adjustments. What are the adjustments? Director's fees is not charged in the cost. So, when the director's fee is not charged in the cost, financial profit will go down because you are charged only in the financials. So, when the financial profit goes down, you add back it. How much? 650. You add back 650. Director's fees. Next one, provision for the bad debts only taken in the financial one, you add back it. 570. 570. See, provision for bad debts 570, you add back it. Bank interest you received in the financial only, so it got increased, financial profit got increased, so you reduce it. You reduce it so that you will come at the same place. So, reduce it by 30 rupees. 30 rupees, where it is, yes, bank interest. Next one, income tax. Income tax is only deducted from the financial. Income tax is only deducted from the financial. So, you add back it. You add back it. 8,300 rupees. Income tax 8,300 rupees. Next, overheads in the cost accounts were estimated 8,500 rupees and the charges shown in the financial accounts is 8,320. See, gross profit is equal financial cost. See, in the financial one, you have shown 8,500. I will write here. Take the example, gross profit we have in the financial one and in the cost one. Here 10,000 rupees. Example I am saying, taking. Don't ask me from where you have taken, madam. To make you understand, 10,000 rupees is the gross profit. But here, in the cost, you have deducted 8,500 rupees as a expenditure, but in the financial 8,320 rupees you have deducted as a expenditure. So, what is the net profit you got? 1680 here, 1,500 here. It means because of this under recovery of the overheads, no, over recovery of the overheads in the cost accounts, the financial profit has gone up. Cost profit is gone down. So you cannot touch the cost one because you are in the cost, you are in the financial, so you cannot touch cost. So you reduce in the financial. How much? The extra 1680 minus 1500, the extra portion 1,180 rupees you deduct from the financials. 180 rupees. You come back here. Over recovery of overheads 180 rupees. Try to understand. Next. Work was started during the year on a new factory. The expenditure 16,000 was incurred. Depreciation of 5% was provided in the financial accounts. 16,000 into 5% is the 800 rupees expenditure shown in the financial one. So, financial profit has gone down. So, you add back it. How much? 800. 16,000 into 5% is 8,000. Sorry, 800. You add back it. Right, that's it. So, do the calculation. 18,550 plus 650 plus 570. This one. 570 plus 8,300 plus 800. That is 28,870 minus 30 minus 180, that is 28,660. So, this is the profit as per the cost accounts. Isn't it easy, guys? Okay. Next, we will go to the next question. Mysore Petrol Limited showed a net loss of 2,08,000 as per their financial accounts for the year ended 31st March 2017. The cost accounts, however, disclosed a net loss of 1,64,000 for the same period. The following information was revealed as a result of the scrutiny of the figures of both the sets of books. Here, factory overheads under recovered this much, administration overheads over recovered this much, depreciation charged in the financial, depreciation charged in the cost, interest on investment not included in the cost, income tax provided this much, transfer fee in the books is this much, stores adjustments, that is a credit in the financial books this much. Prepare reconciliation statement. So, prepare reconciliation statement. Right. Now, one by one we will see. Factory overheads under recovered. Factory overheads under recovered in the sense what? Under recovered. I told you previously. Once again, I am saying under recover and over recovered will only be in the in the cost accounts, not in the financial accounts. In the financial accounts, only actual basis of overheads will be taken. But in the cost, under recover, over recover will be there. Right. So, under financial cost, factory overheads under recovered in the, see, I'll show you here. 10,000 rupees is a gross profit. Gross profit, financial accounts, cost accounts. 10,000 rupees here, 10,000 rupees here. Under recovered how much? 3,000 rupees here. See, take the example, actually 4,000 should be there, but you recovered only 3,000. You are actually supposed to recover 4,000, but you are recovered 3,000. Example to understand this one. So, here your profit is showing 6,000, but here your profit is showing 7,000 rupees. So, what you need to do? You cannot touch the cost one. You need to touch only the financial one. So, you add back it. You add back this 3,000 rupees. Whatever the amount is the under recovered one, the difference you add back it. In our question, this is a 3,000 rupees. So, 3,000 rupees under recovered portion you need to add back to the financial one. Under recovered factory overheads, add back. If it is a over recovered, minus it. Under recovered, plus it. Right. Next one, administration overheads over recovered. Under recovered we have added, so over recovered, minus it. 2,000 rupees. Over recovery of administration overheads, 2,000 rupees. Depreciation charged in the financial is 60,000. Depreciation charged in the cost is 65,000. Again, the expenditure shown in the cost is 65,000 and in the financial is 60. When extra expenditure is shown in the financial, cost one, cost profit gone down. Financial profit is here, cost profit is here because extra expenditure you are shown in the cost. So, you cannot touch this one, cost one. So, you also reduce in the financial one. How much? The excess portion, that is a 5,000 rupees. 5,000 rupees over recovery of the depreciation, 5,000 rupees. Getting my point? Next one, interest on investment not included in the cost. Interest on investment is not included in the cost. So, when you received the interest, it has gone up. In the financial one, you reduce it with the same amount, 10,000. In the financial only. In the financial only. So, where is the financial one? This one. How much amount? Interest, that is a 10,000 rupees. Reduce it. Interest on investments considered in the financial one. Right. Next one. Income tax. Income tax is shown in the financial only. This is the financial one. In the financial only. So, income tax, when it is shown in the financial accounts, the financial profit has gone down. So, you add back it. How much amount? 60,000. Financial profit, 60,000 income tax. You add back it. Next one, transfer fees in the financial book. See, actually here in the question, as per our book, they are assuming that this is a income. They are assuming as per the question, this is a income. So, income is shown in the financial, in the sense income has gone up. Your cost is the year, income of the financial is year. So, you come down with the 1,000 rupees. Transfer fees 1,000 rupees. You come down. Next one. Stores adjustments credit in the financial. Stores adjustments credited in the financial, in the sense financial profit has gone up. So you reduce it with the same number to reach the cost profit. That is 1000 rupees. Stores adjustment. See one more thing guys. Here you need to pay attention. Here in the question it is given as a net loss. Don't try to reverse the entries and all. When it is a loss, simply you take this is a minus. The profit in place of the minus. Everything will remain same. Everything will remain same. So this is a minus. Minus 2,08,000 plus 3,000 plus 60,000 is minus 1,45,000. Here this is minus again. To this you add. For the minus you add. No, again minus. 2,000 minus 5,000 minus 10,000 minus 1,000 minus 1,000, that is nothing but minus 1,64,000. That is a loss in the cost accounts. As per the cost accounts, the loss is 1,64,000 rupees. Yes. Okay. Next problem here is, during a particular year, the auditor certified the financial accounts showing profit of 1,68,000, whereas the same as for the costing books was coming out to be 2,40,000. Given the following information, you are asked to prepare a reconciliation statement showing the reasons for the gap. So we need to, guys, again I'm telling you, this type of problem can be expected in the examination for 8 marks. This type of problem, but if you understand conceptually, the problem is easy. But if you don't understand, the problem will be very confusing one. Only you will do plus minus, that's it. But what should be added, what should be deducted, you should be very much confident, like you should have much knowledge which one should be added and which one should not be added. So this type of problem can be expected in the examination for 8 marks. I'm telling you, in the final level, in the group 4 cost and management audit, you have one paper, that is a paper number 19. The same complete chapter is there in your final also. So don't be in assumption that I will leave this chapter for the choice. There is no choice. You have to learn it, because in the final also you have to learn it. Right? Right. Here trading P&L is given. What is the information? Opening stock, purchases, direct wages, factory overhead, gross profit is given. Sales, closing stock, gross profit, sundry income, expenditure, administration expenses, selling expenses, and net profit. The costing records show how at book value of closing stock is this much. Factory overheads have been absorbed to the extent of this much. Sundry income is not considered, in where this is all the information of the cost. Total absorption of direct wages is this much. Administration expenses are covered at 3% selling price. Selling price include 5% for the selling expenses. Yes. The question answer appears to be very simple, but you need to understand it conceptually. See here, what is the opening stock? See, come back here. Here, whatever the transactions are given, whatever the items are given, for that you check this information with the financial one. There, wherever you find a discrepancy, that discrepancy need to be reported. See, book value of the closing stock is 7,80,000 as for the cost, but as for the financial, 7,50,000. When, this one I'll explain you with the example. See, this is a trading P&L. Please bear with me, but I'll make sure that you will get 8 marks. If you are with me for 2 hours for listening these classes, I'll make sure that you will get 8 marks in your examination. If this question comes in the examination, I'll make you understand in that way. Right? See, this is a financial one. Financial one. is a P&L, trading and P&L. Take the example. I'll show with the example. Take the example, we have 1000 rupees is the opening stock. Again, don't ask me from where you have taken, madam. This is to make you understand with the conceptually. I'm taking the numbers. 1000 rupees is the opening stock we have. 10,000 rupees is the sales we have. Closing stock, I will write here 2000. So, how much will be my gross profit? My gross profit will be 10,000 plus 2000, that is 12,000 minus 1000 is nothing but 11,000 rupees. What is there, madam? We know this one from the intermediate onwards, from the foundation onwards we are learning. Yes, you are learning, but why I am giving this example in the sense, you will understand in a second. So, this same thing, I will write here once again. 1000 here, 10,000 here. See, instead of 2000, if I decrease the closing stock value, means if I decrease the value of the closing stock, if I undervalue the closing stock, 1000 rupees instead of 2000 rupees, if I am writing 1000 rupees, how much will be my gross profit? My gross profit will be 11,000 minus 1000 is nothing but 10,000. See, are you able to see one thing? Are you able to note it out? See, when the closing stock is decreasing, your gross profit is also decreasing in the financial one. When the closing stock is increasing, your gross profit is also increasing in the financial one. So, come back here. See, here 7,50,000 is a closing stock as for the financial. As for the cost, 7,80,000. In the sense, financial profit, when it is closing stock is decreased, profit is also decreased. See, here, when the closing stock is decreased in the financial one, the profit of the financial is getting decreased. So, what you need to do? You cannot touch the cost one. You need to add back it. You need to add back in the financial one. What is the amount? The difference between these two, that is a 30,000. You come here. Yes. Overvaluation of the closing stock in the cost accounts. Are you understanding? So, this is a 30,000 rupees. Next one. Overheads. Factory overheads have been absorbed to the extent of 1,89,800 rupees in the cost, but in the financial, overheads is 2,10,000 rupees. See, financial is this much, cost is this much. When it is under recovered, I'll remove this one. Here I told you, right, this one I explained you so many times. Factory overheads have been absorbed to the extent of this one. See, cost one 1,89,800, financial one is 2,10,000. So when the cost expenditure is reduced less, cost profit is up, financial profit is here. So you add back it, the difference. The difference is here. Under recovery of overheads, 2,10,000 minus 1,89,900, you add back it. Next one, sundry income not shown in the financial, cost. So it is here, you come down. How much? 5,000 rupees. 5,000 rupees, you come down. Total absorption of direct wages, 2,46,000. 2,46,000 here. But here 2,30,000. Extra expenditure is decreased in the financial cost one. When it is decreased extra expenditure, the profit also goes down in the cost. In the financial, also you reduce it. How much? 16,000. Yes. Over recovery of wages, 16,000 rupees. Right. Next one, administration expenses are covered at 3% of the selling price. What is the selling price? 34 lakh 65,000 into 3%, that is 1 lakh 3,950 as per the cost, but as per the financial 2,25,000. When expenditure is decreased less, in the sense the profit goes up in the cost, so you add back it. The difference between these two. Administration expenses, not 2,25,000, 95,000. So the difference between these two is how much? Is nothing but 8,950 rupees. See, come back here. 8,950. Next one, selling prices include 5% for the selling expenses. 5% on this, 34 lakh 65,000 into 5% is 1,73,250. 1,73,250. What is the selling price as per the financial selling expenses? 2,25,000. 51,750. Where it is? See, under recovered one. So you add back it. Then you add it, you will get the answer. 1,68,000 plus 30,000 plus 20,200 plus 57,750, that is 2,69,950 minus 5,000 minus 16,000 minus 8950, that is 2,40,000 rupees is the profit as for the cost accounts. Right? Okay, we will move further. A transistor manufacturer who commenced his business on 1st June 2017 supplies you with the following information and asks you to prepare a statement showing the profit per transistor sold. Wages, materials are to be charged actual cost, works overhead at 75% of wages and office overheads at 30% of works cost. Number of transistors manufactured and sold during the year was this much, 540. Other expenses given, material cost and wages, selling price is given. If the actual work expenses are this much, office expenses are this much, prepare a reconciliation statement. So here you need to prepare the cost sheet. Cost sheet you need to prepare. How to prepare cost sheet? See, he said this one, wages and material are to be charged at actual cost. Material and wages are to be charged at actual cost. What is the material cost? 240. Wages cost 80 rupees. So cost sheet, prime cost you are getting, and is said works overhead is 75% of the wages. 75% of the wages, that is 80 into 75% is a 60 rupees is the works overhead. Then you got the works cost. Then office overheads at 30% of the works cost. What is the works cost we got? 380. 380 is the works cost. Office overhead at 30% of the works cost. 380 into 30% is 114 is the works cost. Then next, number of units sold is given. So this is the total cost you got, and he said selling price is 60 rupees. 60 rupees. The balancing figure is the profit. So you multiply with the number of units, that is number of units you have 540. You multiply with the number of units so that you will get the total cost of the material, wages and expenditure and all. So this is a cost sheet. Now we need to prepare the trading and P&L also. See, material how much? We manufactured 540 units. Material cost is 240 rupees per unit. 540 into 240 is nothing but 1,29,600. Yes, in the same manner you write to the wages also. Next, works overhead, works expenses and office expenses. Works of expenses is 32,160. Works expenses is nothing but the manufacturing expenses, that is you will take in the trading one. The office expenses you will take in the P&L. So you write here. Next one, office expenses 61,800. 61,800. So sales price 600 is the selling price and 540. 600 into 540 rupees, that is 3,24,000 rupees is the selling price. So you got the gross profit. This gross profit is here. From this you remove the office expenses, then you got the net profit. Now this one is very much easy, we can also do. Yes, you can also do, but you need to prepare costing, cost sheet and the trading and P&L. Now from this you need to do the reconciliation. How? See, here works cost is incurred, works overhead is 32,400, but here works overhead is 32,160. So there is a under recovery and over recovery, there is a discrepancy. So that discrepancy has to be reconciled. See, come here. See, over recovery of the overheads, this one I explained you very nicely. This one 32,000 you have deducted in the 32,400 you deducted in the cost, but in the financial you deducted only 32,160. In the sense cost profit has gone down, financial profit is here only. So you come down with the difference. 32,160 minus 32,400, that is 240 rupees. You minus it, right? Over recovery of the works overhead. And the next one, you check another one also. Administration overheads. Administration overheads you charged here 61,560 in the cost, but in the financial 61,800. In the sense, in the financial you recovered extra. When you recovered extra in the financial profit has gone down. So you add back it. How much? 61,800 minus 61,560. The difference between these two, that is 240. You add back it. That's it. This one minus and plus. This is your reconciliation statement. This is for the 8 marks, guys. I'm telling you, if you pay attention, if you are with me for 2 hours in this class, I'll give you assurance that you will be going to gain 8 marks in the examination, provided this question comes in the examination. So this is a very much important question topic also. So this type of problems can also be expected in the examination, right? Next one, given below is the trading and profit and loss account of Vikas Electronics for the accounting year ended 31st March 2017. Trading P&L is given. What is given? Direct material consumed, wages, factory expenses, office expenses, selling and distribution, and sales number of units is given, rate per unit is also given. So you got the net profit. From this, normal output of the factory is 2,000 units. Factory overheads are fixed up to 60,000 rupees, and office expenses are fixed for all practical purposes. Selling and distribution expenses are fixed to the extent of 50,000 rupees. The rest are variable. I'll explain you, not an issue. Prepare a statement of reconciliation of profit as per the cost accounts and the financial accounts. So okay. See, come back here. Material consumed is how much? See, what we need to find out first of all, what we need to write here, cost sheet. Cost sheet. Material consumed, there is no information given for the material, so we will take from the financial only. Material consumed is 3 lakhs and wages is 2 lakhs. Material 3 lakhs and wages is 2 lakhs. You got the prime cost. See, here one information is given. Normal output is 2 lakhs units. Factory overheads are fixed up to 60,000. It means what? Factory overhead here it is showing 1,20,000. Factory overhead 1,20,000. It is divided into two parts. One is the fixed portion, other one is the variable portion. This fixed portion is 60,000 rupees. This fixed portion is 60,000 rupees for the normal output of 2 lakhs units. For 2 lakhs units. But how many units we produced? 2,50,000 units. So depends upon the units, it will get changed. And variable portion is also given, that is the difference between these two will be the variable portion, that is 60,000. You come back here. Fixed cost is 60,000 rupees when your capacity is 2 lakhs units. See, 60,000 is the fixed cost when your capacity is 2 lakhs units. Then what about for the 2,50,000 units? 60,000 divided by 2 lakhs into 2,50,000, that is nothing but 75,000 rupees is the fixed portion of your works overhead. That is a factory expenses. Next one, what is the variable portion? Variable portion is 1,60,000 minus 60,000. I told you this one. This is a variable portion. All put together, you got 1,35,000 rupees as a works overhead. Yes. Yes. Next one, come back. Next year, office expenses are fixed for all the purposes. So office expenses are fixed 40,000 rupees. 40,000 rupees is fixed for the capacity of 2 lakhs units, but we produced 2,50,000 units. So office expenses 40,000 for the 2 lakhs units. Then what about for the 2,50,000 units? Nothing but 50,000 rupees. Yes. Next one. Selling and distribution expenses are fixed to the extent of 50,000 and rest is variable. Selling and distribution expenses are 80,000 rupees given and remaining is 50,000 is a fixed. Selling and distribution, it is given 80,000, but this is divided into two portions. One is a fixed portion, other one is a variable portion. So fixed portion it is given 50,000 rupees. So 50,000, remaining is 30,000. But as per our book, as per my knowledge, there is a print mistake. 50,000, here I'll tell you. 50,000 is a fixed for the 2 lakhs units. 50,000 is the amount. 50,000 is the amount fixed for the 2 lakhs units. Then what about for the 2,50,000 units? 50,000 divided by 2 lakhs into 2,50,000, that is 62,500 rupees. And next one, variable portion, actually 80 minus 50 should be 30, but they have done some, I don't know, but how far it is correct. But as per my knowledge, they have copy pasted this one. As per my knowledge, because this is not 120. This is given in the question 80. So as per wrong information, this is 120 minus 60. Actually, this should be 80 minus 60. 80,000 minus 60,000 should be the variable portion. That is a 20,000. It should be here, but they might have done some print mistake. That's what I can tell you. Next one. Yes, you got all the information. Cost of the sales. Here everything is done. Right. So now you got the expenditure is this much. I will add and show you. 3 lakhs plus 2 lakhs, that is a 5 lakhs prime cost, plus 75,000 plus 60,000, that is a 6 lakhs 35,000 plus 50,000, 6 lakh 85,000 plus 62,500 plus 30,000, that is 7 lakh 77,500 is the cost of the total cost, that is the cost of the sales. But what is the amount we got from the selling? 7,50,000. So the difference between these two is the loss. The difference between these two is the loss. This is the loss as per the cost accounts. Now see, cost financial is already given. This is the financial portion is already given. The cost one we have calculated. Now we need to do the reconciliation. How? Come here. Profit as per the financial accounts is 10,000 rupees. That is what given here. Profit as per the financial accounts is the 10,000 rupees. Right? Next, you check all the overheads. All the overheads. See, in this question, material and labor is correct. Material and labor. So, okay. In the next question, I'll explain you. But this is a simple question, I can tell you. Over recovery of the factory overheads. If it is a over recovery, you less it. Over recovery of the office expenses. I explained you in the previous question. Selling and distribution. Yes, you reduce it. So you got the loss as per the cost accountants. This much is a loss. Yes. Yes, we will go to the next problem. The following is the trading and profit and loss account of Time and Trading Limited for the year ending 31st December 2016. Right? Trading and profit and loss account is material consumed given, direct wages, works overhead, administration overhead, selling and distribution, and profit. Next one, sales units is given and amount is also given. Finished stock in units given, work in progress, material, wages, and overhead is given. So, manufacturing a standard unit, the company's cost records show that these are the cost records. Works overhead have been charged to the work in progress at 20% of the prime cost. Administration overheads have been recovered at 3 rupees for finished units. Selling and distribution overheads have been recovered at 4 rupees per unit sold. The unabsorbed or overabsorbed overheads have not been adjusted into the costing profit and loss account. Okay. So, ठीक है. Okay. Here, a costing profit and loss account indicating the net profit we need to prepare, and a statement reconciling the profit as disclosed by cost accounts and that is shown in the financial accounts. Okay. See, everyone again pay attention. If the question paper comes in a tough way, this type of problem can be expected. If ICMI is wanted to give the question paper in tough way, in the tough manner, then this type of problem can be expected. Nothing is there in this problem also, but only small thing you will forget, whether to take into consideration or not, you will forget. So for that, you need to pay attention. Okay. We'll go. Material consumed 7,08,000. Direct expenses 3,71,000. Next, material plus direct expenses is the prime cost. Is said works overheads have been charged to the work in progress 20% of the works cost, prime cost. 7,08,000 plus 3,71,000, that is 10,79,000. On this 20% is the works cost. 2,15,800. Total is 12,94,800. You know this one anyhow. Yeah. Material consumed plus direct wages and direct expenses is your prime cost. For this prime cost, you will have add works overhead. Then you will have add opening work in progress minus closing work in progress. Then you will get what you will get? Factory works cost or factory cost. To this works cost or factory cost, you will add administration overheads. To this you will have add work in progress opening, sorry, not work in progress, finished goods opening one, and minus closing finished goods, right? So here we don't have opening finished goods, but we have closing finished goods, sorry, work in progress. We don't have opening work in progress, but we have closing work in progress. The value is 17,000 plus 8,000 plus 5,000, that is 30,000. So you reduce it where it is closing work in progress, 30,000 rupees, right? Next, closing work in progress is 30,000 rupees. After adding closing work in progress, you will get, deducting closing work in progress, you will get works cost or the factory cost. You got the works cost, this much. 12,94,800 minus 30,000 is 12,64,800. For this, you add administration overhead. What is administration overhead here? Administration overheads have been recovered at 3 rupees of the finished goods. How to find out the finished goods? Come back here. See, we know this one from the intermediate and foundation level onwards. We are learning opening plus production minus closing is your sales. So what is the, see what is saying here, administration overheads have been recovered 3 rupees for the finished units. Finished units in the sense produced units. So how to calculate this one? Can I say in this way? Sales plus closing minus opening is my production. So if this is the case, anyhow we don't have any opening finished goods here. If you see here, we don't have any opening finished goods, but we have closing finished goods 1,000 units and the units sold is 30,000 units. So come back here and you substitute in this. Say sold units 30,000, closing units we have 1,000, opening nil. So I can say the produced units are 31,000. So 31,000 units into 3 rupees per unit is the administration overheads. So 31,000 units into 3 rupees, that is a 93,000. 31,000 into 3 rupees, that is a 93,000 rupees is a administration overheads, right? Then for this, what you need to do, when you add this administration overhead, what you got? Cost of the production you got. For this you need to add, acha, here I wrote mistakenly. After adding administration overheads, you will get this cost of the production. From this, opening finished goods minus closing finished goods. So cost of the production you got 13,57,800. From this, closing stock value should be taken, but don't do this mistake. Don't take the closing stock value from the financial accounts. You should not take in the cost accounts in that way. So what to do? See, for producing How many units we produced actually? Somewhere we have done 31,000 units. For producing 31,000 units, we incurred 13,57,800. See, 13,57,800 rupees we have incurred to produce 31,000 units. Then we have in the closing stock 1,000 units. For that, what is the cost? So this is a cost 13,57,800 for the 31,000 units. Then what about for the 1,000 units? That is 43,800 rupees. So you reduce it from this cost of the production minus 13,57,800. You are getting 13,14,000 rupees as a cost of the goods sold. The question is not done. Next thing here is administration overheads have been recovered at 4 rupees per units sold. How many units we sold? 30,000 units we sold. So 30,000 into 4 rupees is nothing but 1,20,000 rupees is the selling and distribution expenses. Plus this cost of the sales 13,14,000. This is the total cost of the goods sold. And what is the selling price at which we sold? 15 lakhs. So 15 lakhs minus this cost of the goods sold. This is a balancing figure. I can say this is a profit. Yes. Okay. So now you got costing P&L. Any of financial P&L is also given. So you need to check each and every item in the cost and the financial. If it is under recovered or over recovered or undervalued or overvalued, based upon that you need to take the decision. Right. So we have calculated this one. Now come here. See, statement of reconciliation. Profit as per the financial one, 69,000. From where we got? Here we got 69,000 as a profit. So from this, under recovery of administration overheads, I explained you under recovery, over recovery, what is the treatment? Then you do that one, you will get the answer. For in the past 2-3 problems, I explained you very clearly what is under recover and what is over recover with the example. Just go back if you have any concern here. Okay, we'll go to the next problem, the question number 20. The financial profit and loss account of a manufacturing company for the year ending 31st March 2017 is given below. Trading P&L is given, that is the financial profit and loss account is given. Opening stock, raw material, see here also I am telling you, please pay attention. Opening stock, closing stock, undervaluation, overvaluation, expenditure is undervalued, overheads are undervalued, overvalued. In these things you need to pay attention, guys. I am telling you. So trading P&L is given, opening stock is given, raw material, finished stock, three information given. Purchases, factory wages, factory overhead, that is a factory. Electricity, gross profit, sales information given, closing stock is given, material, closing material, raw material and finished stock, everything is given. Opening one is given, at the same time closing one is also given. Stock, that is a raw material, finished goods and work in progress. Administration overhead given, selling and expenses given, bad debts given, net profit, gross profit from here it has carried like it has taken here. Miscellaneous income is taken. So this is the information of the financial accounts. The cost accounts of the concern showed a net profit of 1,32,200 rupees. The profit of the cost, you should read carefully, cost one. It seems that the costing profit and loss account is arrived at on the basis of figures furnished below. This is the information relating to the cost accounts. This is the information relating to cost accounts. Opening stock of raw material, finished goods and work in progress is this much. But here, as per the costing is this much, 77,500 in the financial. But in the cost, 90,800 rupees. Closing stock of raw material, finished goods and work in progress is 69,500. But in the financial, this much. You are required to prepare a memorandum reconciliation account and reconcile the differences in the profit and loss account. So, this is another kind of problem in the reconciliation only. Memorandum reconciliation account, we need to prepare it. So, here come back. See, opening stock is here how much? 77,000. If you add all together, 25,000 plus 40,000 plus 12,500, that is 77,500. But here, what is the opening stock is given? 90,800 minus 90,800. That is 13,300 rupees overvaluation of the opening stock in the cost accounts. In the cost accounts, opening stock got overvalued. 13,300 rupees. Coming to the closing one, 69,500 is the closing stock as per the cost accounts. But as for the financial, how much we will see? 30,000 plus 15,000 plus 20,700, that is 65,000. 65,700. So 65,700 in the financial. In the cost, 69,000. Again, there is a overvaluation of the closing stock in this one. So the difference between these two is how much? 65,700 minus 69,500, that is nothing but 3,800 rupees is the amount. This is the opening overvaluation, this is a closing overvaluation. Right. Next one. Here, financial profit is 1,32,400. You write in the opposite side, 1,32,400. Cost profit you write here. Cost profit is 1,32,200. Cost profit is 1,32,200. See guys, as I told you, this is the examination oriented one. I am not giving you much explanation on this, but you try to understand. In the financial one, the profit is left side, the debit balance. Sorry, in the left side, you take in the opposite side, in the credit one. So, financial profit here, I'll show you 1,32,000 here. So, this one we have taken here, 1,32,000 financial profit. Cost profit this side. The miscellaneous profit we have shown in the financial one but not shown in the cost one. We are taking this side. Right. So, this one done. Oh, this one done, this one done. This one also done, this one also done, this one also done. See, bad debts recovered, sorry, bad debts, provision for the bad debts only we will write in the financial one. So, you take here opposite side 15,600. 15,600 opposite side. Next, administration overheads 20,500. Administration overheads 20,500 here. Right. Next, that's it. Everything is taken into consideration. This is a memorandum reconciliation account. Yes. The next problem here. The following figures have been extracted from the financial accounts from the, sorry, once again I'll read it. The following figures have been extracted from financial accounts of a manufacturing firm for the first year of its operations. Direct material consumed this much, direct wages this much, overheads this much, administration this much, selling and distribution, bad debts, preliminary expenses written off, legal charges, dividend received, interest on deposits received, sale units this many and rate is this much, closing stock finished goods this much, work in progress this much. The cost accounts for the same period reveal that the direct material consumption is this much. See, in financial one this much, cost one this much. Factory overheads recovered at 20% of the prime cost. Okay. Administration overheads is recovered 66 rupees per unit of production. How many units you produced into 6 rupees is the administration overheads. And selling and distribution overheads are recovered at 8 rupees per units sold. Number of units sold into 8 rupees is the selling and distribution overhead. You are required to prepare costing and profit and loss account and reconcile the differences in the profits in the two sets of accounts. So here for the costing P&L, material you take 56,000, direct material is the direct wages 30,000. In the cost, direct wages information is not given, then you go for the financial one and you take it 30,000 direct wages. So direct wages. You got prime cost. Here he said one thing. Factory overheads at 20% of the prime cost. 86,000 rupees is the prime cost. Sorry, not 86,000. 86 lakhs is the prime cost into 20%. That is 17 lakhs 20,000 is a factory overhead. You add to the prime cost, you are getting 103 lakhs 20,000. That is 1 crore 3 lakhs 20,000 rupees is the amount you got. For this, I already told you, you need to add opening work in progress and minus closing work in progress. So opening work in progress is how much? Is he given in the question? Go and check. Opening work in progress, is he given? No, he has given the information for the closing stock, finished goods and work in progress. But in the opening one, only material consumed is given, no opening finished goods given, no opening work in progress given. So opening work in progress is not there. So closing work in progress is how much? Come back here. Closing work in progress is 2,40,000. You remove 2,40,000 rupees from here. So how much you are getting? Minus 2,40,000 is 100 lakhs 80,000. That is 1 crore 80,000 rupees is a factory cost. For this, you need to add the administration overheads. Administration overheads are recovered at 6 rupees per unit of the production. How many units we produced? I told you the formula. How to calculate it? Sale units, that is the units sold, plus closing stock minus opening stock, opening finished goods is your number of units production or produced. So how many units we sold? We sold, where it is? We sold 1,20,000 units we sold. Units we sold, and closing finished goods we have 4,000. Opening finished goods information is not given here. It is nil. 1,24,000 units we produced it. So 1,24,000 units we produced. Administration overhead is 6 rupees per unit into 1,24,000 units we produced. So 1,24,000 into 6 rupees is nothing but 7,44,000. 7,44,000. Yes, it is the right answer. Sorry, this one. Now you got the cost of the production. Yes, you got this one as a cost of the production. Now you add opening finished goods if you have, otherwise you remove the closing finished goods. But don't take finished goods value from the financial accounts. In the financial account, whatever value is the different, and in the cost accounts we will not take in that way. We will take in this way. 108 lakhs to 24,000 rupees is the charge we incurred to produce 1,24,000 units. Then what about the units which are there in the closing stock? that is 4000 units. So come back here, I'll show you 180 lakhs 24,000 rupees we have incurred to produce 1,24,000 units. Then the closing stock we have 4,000 units. For that, what is the cost? That is 3,49,161 rupees. This one you remove it from the cost of the production. That is nothing but 104,74,839 rupees is the cost of the goods sold. For this, you need to add the selling and distribution expenses. That is, selling and distribution overheads are recovered at 8 rupees per units sold. How many units we sold? We sold 120 lakhs. 1,20,000 units we sold. Per unit 8 rupees as a selling and distribution. That is 9,60,000 rupees. So 9,60,000 rupees is the selling and distribution. You add it to the cost of the production, cost of the goods sold. That is 1,34,839 we got. And from the sale amount, how much we got? From the sale, 120 lakhs. So minus 120 lakhs, you are getting the profit of 5,65,161 rupees is the profit. So this is a costing P&L. This is a sale value. How many units we sold into rate per unit. It is anyhow given in the question. Yes. So you got the cost sheet. Now you go for the financial accounts. Financial trading, see, these people, the question is given only the raw data. You need to prepare the financial accounts also, financial trading P&L also. Come back here. Come back here. Material 50,000 you take from here. 50,000, 30,000 wages. 30,000 wages. Factory overhead 16 lakhs. Administration overhead 7 lakhs. Selling and distribution 9,60,000. 16,000, 9,07,000, and bad debts also given. Preliminary expenses written off you will do in the financial only, not in the cost. So you take into consideration legal expenses also in the financial only. And dividend received, this is the income, you will credit in the costing, not in the costing, in the financial accounts. And interest on the deposits you will credit it. Sale value, from the sale we got this much. And closing stock valuation, closing stock 3,20,000 and 2,40,000 given in the question itself. 3,20,000 and 2,40,000, this one. Then you got these figures. From this you do the reconciliation. You are very much familiar with the reconciliation. I explained you very nicely. So reconciliation, what is the overvalued and what is the undervalued? Opening stock is undervalued or overvalued? You check and you do on yourself. That is the practice for you guys. Right. Last problem. I'll give you homework. Chota problem. I'll give you homework. You try it. Okay guys, that's all for the day. And we are planning for accounts also, and we are planning for DT, IDT also. If you people are interested, then based upon your interest only we will move further. We are planning for the DT and we are planning for the IDT. We are planning for second group costing and FM, and first group accounts, and second group advanced accounts. But this is completely depends upon the response we receive from the students. So guys, that's what I can tell you. This is the last minute revision. If you listen carefully, if you listen this class carefully. Hardly have taken 1.5 hour time, but if the question comes in the examination, definitely you will be able to score 8 marks in the examination, right? So okay guys, that's all for the day. Thank you.